investors.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come and parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great, Adam. Yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling prowling with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read. It's generational. Thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show right here on TFNN. I hope you all had a fantastic weekend, maybe a little bit restful. Let's hope so. It is beautiful out here right now. By that, I mean, what do we got, about like 60-something degrees, 69 degrees, a little bit cloudy. I love that weather. I was taking a walk a little bit earlier for my lunch break and was just thinking, man, Florida isn't that bad. And then I realized this is this way only about 3% of the year. And for the rest of the year, it is brutally hot. And that, I think there's some kind of moral there. Anyways, let's take a look at the composite right now. You're trading up about 1%. What has been going on really in the market the past few days is you start off, pre-market with very strong movement to the upside, and then you kind of get a sell-off a little bit throughout the day. Now, of course, the composite has had a lot of movement, mainly from NVIDIA. But let's take a look. You're up 1% right now, trading at 19,816. The Dow Jones Industrial off about 0.12% at 42,681. You have the DXY trading lower, 108.22, still relatively strong. I believe the Loonie exploded in strength. Justin Trudeau has apparently resigned, and I think a lot of people thought that he had mismanaged the government, especially the economy as well. You have crude oil off about 0.65%, trading at 73.48. Let's see, you got the SPY trading up 0.44% at 594. But see, this is kind of what I'm saying, right? You start off the day somewhat strong. Man, can we go back even further? Right, you get it around here, we're at like 11:30 here at open. Okay, you get a big sell-off, and then we just traverse right back down. Even my smaller kind of stocks that I look at are doing the same thing, right? You have a lot of exuberance to the upside in the morning, and then you kind of just peter off throughout the rest of the day. Let's take a look here. We have gold contract off 0.37%, trading at 2,645. You got copper trading at 4.15. Very strong bid on copper recently, no doubt. Let's take a look. Silver up 1.33% at 30.46. You got the Russell basically flat right now, up 0.04%. Celsius up 1.22. Lucid up 3.04. I wonder what our Rivian's doing. Man, I wish I could turn the camera and show you guys this wind out here. Off 5.21% at 15.63. Of course, they had some good news. Essentially, they delivered more than Wall Street had anticipated, but it was in line with kind of their earlier projections. Those projections had been tempered a little bit because they had supply chain issues. It looks like those were resolved. Does that warrant, movement up to it was like 16.30 or something Friday? Probably not. That's why it's trading off about 5% right now. And then Steel Dynamics moving up 5%, 4.7%, and then Tesla off 1.27% at 405.31. Of course, we are still above that 400 level. It doesn't look like that stock has any intention of stopping anytime soon. Man, a lot to talk about. The first thing I want to say, well, we are going to have Steve Rhodes on in the second segment. Maybe he'll be on for the third as well. It'll be kind of interesting to see what happens with that. I know he always has some fantastic analysis for us. Some things I want to go into today. I did kind of make a little bit of a list. I got AI, I got AIoT, looking at robotics a little bit because a lot of robotics companies are catching bids right now. Photonics a bit, and then data centers as well. Of course, a lot of this movement up with NVIDIA, of course, was with Foxconn some announcements with Blackwell. But then, of course, you have Microsoft saying they're going to build out these data centers in a major way. So these are companies like RXT, you have PLR, which is a Reed, APLD, NVTS, and Wolf. Both of those are doing silicon carbide, which we can talk about. In some ways, this could compete with photonics to some certain extent. But we'll discuss all of that going forward. Some of the big news that just came out, and it's one we've been following a little bit, is everything to do with Salt Typhoon, okay? So Salt Typhoon is a persistent threat, okay, an advanced persistent threat. That's an APT. That's basically some kind of cyber group that is how would I put it in lay terms, is constantly bugging some kind of network, right? What Salt Typhoon does on the lowest form of your computer, you have something called a kernel that tells a computer how to do literally everything. Basically, they're able to exploit that on Windows. They keep coming up with 0 days. These are the guys that are in the telecom companies that we have. This basically triggered the US government to say start using end-to-end encryption. Now, of course, if you're an Apple-to-Apple communicator, that is end-to-end encryption. If you use Android to Android, that is end-to-end encrypted as well. Cross-platform, those are not. So, you know, if not that I think Salt Typhoon is hitting any of us in any capacity, but just keep in mind that it's something the US government is talking about. Seems like they're really pivoting. So obviously you had AT&T, Verizon, these people were getting exploited in a major way, but now it comes out that Charter, which if you're a Spectrum user, you are a Charter user, and then Windstream Networks as well have been compromised by Salt Typhoon. They're using, from what I'm reading on here, of course they're exploiting kernel, but there's also something called MACsec, which is Media Access Control Security, which isn't often encrypted because it's not internet facing. I believe that's layer 2. Regardless, they actually are able to utilize that apparently to get into the network. This is just kind of what a lot of analysts are saying. I think the question still stands how Salt Typhoon is really exploiting this and getting in. It seems like there's a lot of Chinese components in our telecom system, and the US government is taking a kind of a rip it approach, meaning that if this exists in our telecom, you've got to get rid of it, right? So that creates opportunities for us here, at least, to try to look into different companies that could kind of fill that gap, right, as we're transitioning over to a more modern telecommunications infrastructure. No doubt that needs to happen. If it is true that this group is utilizing basically backdoors in certain devices that comprise our telecom network, then absolutely you have to get rid of it, and we have to be a little bit more serious about where we're buying our stuff from. So that's very interesting kind of stuff. I believe this is like the 8th company now that is confirmed to be breached by Salt Typhoon. So pretty crazy. Of course, you talk about as well, you just have the Treasury that was hacked. Now those were kind of just simple endpoint devices that didn't have a lot of access to anything super important, but still it stands there. When these breaches occur, the government really does have to do something, and I think we're getting to an inflection point with NetSec in this country. I think you've seen it with Biden a little bit, with CISA, right? And there's no doubt, this is low-hanging fruit for the Trump administration to kind of pile money into as well. So very interesting developments right now. We're going to take a look probably throughout this week at different telecom companies that may be able to fill that void, maybe different cybersecurity companies that are currently positioned or may be able to catch bids coming up in the future. Folks, stay right there. We'll be right back with Steve Rhodes. He's the author of Mastering Probability. We'll be right back after this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show right here on TFNN. Let's take a look over here at my computer screen. I'm on the newsletters tab of TFNN.com. Again, just type in TFNN.com. You're going to arrive on the home screen. You're going to go right over to the newsletters tab. And right here, in the third column, first row, we have Mastering Probability newsletter by Steve Rhodes. Now, Steve releases Mastering Probability every day that the market is open. It is fantastic. It is in-depth. I strongly recommend checking this out, especially if you are just starting the new year, starting trading. This is fantastic. He goes over a lot of stuff, okay? And so what I want to say is that if this is the first time you've ever subscribed to a TFNN newsletter, or really let's just say Mastering Probability, you can do so risk-free, 30-day money-back guarantee. I understand there is some apprehension sometimes putting money online. That is why we have built this in. If for whatever reason this newsletter doesn't work out for you, we are offering a 30-day money-back guarantee the first time that you subscribe. We are betting that it is going to work out for you, however. Steve Rhodes is also the host at 11 p.m. for the Trader's Edge. Steve, how are you doing?
Doing great. Now we got to work on your math statistics a little bit, or maybe there's something different in Tampa. It's more than 3% of the days that are good down here in Florida.
I know. Maybe
3%. That would be like 10 days.
I'm prone to hyperbole, Steve. I just remember, we had that nice gust at least in the Bay Area here, about a few weeks ago, and then it went right back up to 90s, and I just...
I know. Well, yeah. Look, I've been down here for over 40 years now, and you are right. There are time periods where it can get pretty sweltering, but I've been in Detroit and Washington, D.C., Atlanta, everywhere else where it's, maybe even worse or what have you. So more than 3%. I don't want the Chamber of Commerce coming after you.
Yeah, right. We don't need to get investigated or anything.
Yeah. So what I thought we would do today is the Spot VIX Index. You and I, we've chatted about this before. Folks that listen to the Trader's Edge show at 11 o'clock, they hear me speak about it. Oftentimes people see this chart see this page right here. And the page has a ton of information on it, more than what just you and I have talked about. So, for example, you and I, we've talked about the one-day rate of change. And so the one-day rate of change, we look at both a one-day rate of change is the one-day rate of change between yesterday's close and today's close. When that is above plus 10% out there, what we'll typically see is the market move lower. But when it's above 10%, these blue arrows out here, they represent those days, by the way. We typically see a bounce or bottom, at least in the futures contract, the overnight session. In fact, just to switch gears here, one thing that you said that and then I'll come right back to this. Mm-hmm. What you mentioned, it was a great observation. I don't know if you and I chatted about this last week or not. And that is that we have seen a little bit of a cycle here where we see the futures markets rally overnight into the morning. Maybe when Europe starts closing around 11:30 or 12, we start to see a sell-off inside the U.S. So that's that phenomena we're seeing as global capital flows coming in overnight, okay, and then through the morning, and then we're seeing the U.S. say, well, thank you, we want to sell into this market, and that's one of the reasons why I actually wanted to bring up the spot VIX index, but just wanted to show folks, some of the amazing tools that are out there. There's also the one-day rate of change where price closes less than 10%. Below minus 10%, not 10% positive, but below minus 10%. And those are these green arrows on my charts out here, and they give us a signal of initiation to higher price out there. So it's a really great those two tools alone are just so helpful in understanding what the market is communicating to us. We've also got the 50-day exponential moving average, and where I use that, I take a look at the spot VIX index, which is in the bottom portion of our screen out there, the little blue squiggly line out there, and that red line is the 50-day exponential moving average. Above that is the S&P 500, and the green rectangles and yellow rectangles. The green rectangles represent when the spot VIX index is below the 50-day exponential moving average. And basically what we see here is the S&P 500 typically moves sideways to higher. Unlike when we take a look at those yellow lines, yellow rectangles or boxes out there, we have the spot VIX index above the 50-day exponential moving average. That's when we typically see markets start moving sideways to lower. At the moment, we are below the 50-day exponential moving average. We closed below it on Friday. The question is, where do we close today? So where's the 50-day exponential moving average right now for the spot VIX? It's only 322. So where's it going to close at 4 p.m.? I don't know where it's going to close, but if it closes below 1659, it still provides an edge to buyers out there of the S&P 500 or the ES Mini. If we close above that, what it's going to suggest to me is that the move on Friday was a false move to the downside of the spot VIX index, and that will then give sellers, the ones that have control. Now, folks can take a look at, since about 2 o'clock or whatever the time was this afternoon, we've seen sellers out there, so one can say sellers are in control. I'm looking at a bigger picture out here, looking at the daily chart, not really taking a look at the intraday signal. So those are things that you and I have discussed. If you look up in the top portion of my screen out here, what you'll see is that the spot VIX index right now, you can go out as far as September 2025 out there as far as the future contracts. And if we take a look at the spot VIX right now is really line number 2 on my screen. It's printed out at 1635. If you look at all the forward future contracts out here, what you'll notice is those are higher than that price. That's a normal condition. That is a normal spot VIX index condition. However, there are periods of time where, and if you look at here over on the left, you'll see I've got a 3-month VIX index. Everybody can get access to that. That's not a Stevie thing. There's a 6-month, and this was created a couple of years ago. Because what I'm going to show folks, I used to have to do manually by taking a look at all of the forward future contracts and compare it to the spot VIX index, and it was a lot of work. And we also have a 1-year spot index out here. So those are, and this is what I'm going to switch to right now. I'm going to switch over to a little bit of a presentation. It should be a little bit easier to kind of see out here. On December 18th, and I've got this notice on the very right. If you're watching us on Tiger TV, it's the very right-hand red, yellow arrow that you see on my screen. It's got the date right underneath it. But on that day, if you can picture, we had I think we had the Dow down over 1,000 points. I know it was over 1,000 points. We had the S&P, cruise lower by 100 points plus or what have you, and it looked like it was the beginning of the end. Right? I mean, that could have been the signal that was the beginning of the end. This is where understanding and utilizing the VIX. Now, this bottom panel of the chart takes the VIX index and divides it by that 3-month. When that ratio goes above 1, it's telling us, first of all, it's telling us that things have gotten out of line. It's telling us that the short term, which would be the VIX, versus, let's say, a 3-month VIX out there, that all the worry is right now. It's not something that is into the future, telling us about longer term that the markets want to absolutely move lower out there. Does that make any sense?
Yes.
Okay, so if we take a look at here, I'm not sure, I've got calendar year 2024 out here. So in calendar year 2024, we've had 3 instances where we've had the ratio again, the spot VIX index divided by its 3-month counterpart, go well above 1 as a ratio out there. And instead of that being the beginning of the end, that was the end of the, how would you say that? Instead of that being the beginning of the end, it really was the end of the end out there. You could, look at it's a really cool thing, because take a look at that it's actually formed bottoms out here. Now, look, that's just 3 examples. I know we're about to go to a breakout there, so I guess if okay with you, I'll stay with you through this second segment, and I'll share with people the other side of the story.
Absolutely. Steve Rhodes, please stay right there, folks. We will be right back with Steve Rhodes, author of Mastering Probability, right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I am joined right now by Steve Rhodes. Steve Rhodes is the author of Mastering Probability and the host of The Trader's Edge, live every day that the market is open, 11 a.m. Eastern Time, right here on TFNN. Steve, before we went to the break, we were taking a look at the VIX. It looks like we are still taking a look at the VIX. What else can we gain? We are,
because I want to. It's really this. Our segment here is really all going to be about the spot VIX. One thing I wanted to mention. So this is a really great tool because, as you can see, especially when you are in a bull market, and so this is all of 2024. We can see we're definitely in a bull market. When it gives us this type of signal, these have been major bottoms. Major bottoms. However, if we take a look at what I've got out here, we have a high in the Dow. I think that was right in the end of November, beginning of December. I don't recall the exact date. But I have just drawn in here a little bit of a descending trend line. Notice here that this one signal that we got back in August, that was a significant bottom. Price never came back, to even test that area. The same can be said about the one that formed here in the end of October. But we can't see the same. We cannot say the same thing that form. Oh, so the top was on December 18th. No, that was a big move lower.
The top, I believe, in the Dow was December 4th.
Perfect. Okay. Yeah. So it was December, but that December 18th low, we already have tested it. Right, so something is a little bit different here. That's where I move over to this set of charts. This set of charts takes us back to 2022 when we actually had a top here, and you'll see same ratio of the spot VIX divided by the 3-month. Everybody can gain access to that. That's an easy thing to do out there, and I've noted those. And so the question really I'm coming back to here when we take a look at you get these big spikes on that ratio. They have led to rallies, but they haven't led to rallies where we don't see those lows again for quite some time. And here, if we take a look at back in the looks like the March timeframe of 2022, we had that one little nice signal there, and then all of a sudden, and it led to a rally 4, 5, 6 days, whatever that was, and the price came back in there and tested. We got another signal that led to a couple of weeks of rally out there, but we kept getting these signals, and what it wasn't really doing is identifying any kind of major bottom out here. In fact, it didn't do that until we got that very last signal in 2022, and that set up the next significant move inside of the stock market. So this can be an extraordinary tool, both in bull markets and in bear markets. In the bear markets, you're going to expect or anticipate bounces or bottom, and then it's up to us to be able to try to identify what's the pattern that identified the top in there to go back and to maybe reshort the market. Last thing that I want to do is take a look at the COVID crash out here. And here, if we take a look at that ratio, the 1 month, the 3 month out here, you can see it remained above it. So the important thing is, how do you know when this thing is actually making that bottom? You get above the +1 level, and when it gets back below that area, that's when it's telling you it should be a fairly solid bottom. Sure. If you take a look at the COVID crash out here, once we got above that 1-to-1 ratio, that lasted for quite some time out there. So there was never really, because it never got back below that 1 ratio where the spot VIX was less than the 3-month, the tool was never really able to be used. Does that make any sense? I'll make sure I'm not confusing. If I'm confusing you, then I'm confusing everybody else too, and I don't really want to do that. There's also a 6-month and a 1 year ratio, so you can do the same thing out there. I suggest that folks that are technical traders, if this is something that's new to them, they're just hearing this out there. It's such a great tool. You want to make sure that you've got it in your toolbox. Definitely. So now, where's that leave us? Now I'm going to go ahead and change screens here. Hopefully, I do this properly. And what we're going to do is So how are we going to try to interpret the information that we're seeing here today? And first thing that we're going to take a look at is, so we know we could be in a market that's starting to move lower out there. We know that because of that last instance where we got that ratio reading that said it should be a major bottom. That was and that was on the 18th, and prices pulled back to test that area. When I take a look at the equity future contracts right now, we've got the daily for the ES, the NQ, the Dow, and the Russell 2000. Resistance here on a rally. If you take a look at the ES Mini, just as an example out here, I'll expand this out. Since the high that came in, and inside the ES Mini that was on December the 6th out here, we can also see that this green line, that's the oscillator and change line. We've discussed this before on the show. We can see how this is where rallies have stopped for the ES Mini. Earlier in the session, when we had the overnight buyers that were in there, looked like we were going to be able to blow through that. Then we have the U.S. sellers that come in here, and look where we're at right now. We are below that oscillator and change line. That reading as we speak right now is 6029, call it 6030 out there. That's what people would be looking at the end of the session today at 5 p.m. to see where the ES Mini has closed at. If it closes below that, even though it's above profile resistance, this could be a signal that we are really looking at a market that wants to move lower. We take a look at the NQ. The NQ today found resistance at the top of its daily profile. Profile levels are where buyers and sellers are at. The top of the profile is where sellers are at exclusively. That number is 21,885 inside the NQ. Price got up there, rejected, and we're also trading below its oscillator and change line. If we take a look at the Dow, now the Dow generated the most bullish signal on Friday. It provided us with a bull sash candle that confirmed what I refer to as a Rhodes momentum indicator bottom. Those are bottoms when they typically form that we see price explode out. It doesn't have to be that very next day out here, but instead of we haven't exploded out, we got up to resistance, the oscillator and change line currently printed right now at 43,297, and we're trading below that. So of these four out here, it really would have been the Dow that I would have expected if we were going back to a bullish style market, that we would have blasted out through here, because it's the only one of these four that have a bottom. If we take a look at the Russell 2000, and I'm going to open this up, and the reason why I want to open this up is this morning during the show I got 3 or 4 different separate emails from listeners asking if they should go long the Russell 2000. Out there, and my advice was no. After looking at the chart even further, I didn't see this when in the initial observation this morning. The bottom panel of this chart shows us the tempo, the cadence, the little dance steps of the market. Yes. And typically markets, in bull markets, what you will typically see moves to the downside that are about 2 bars, 2 days, whether it's 2 days, 2 weeks, 2 months, whatever time frame you're looking at out there. And in bear markets, what we typically see, rallies last about 2 days. Many times they're just 1 day wonders out there, but many times it's just simply a 2-day rally. Since the high that we have inside the Russell 2000, that's November the 25th, we're looking at the black digits on the very bottom. What do we see here? We see a 2-day rally, or 2-day rally. That was into November 29th. Yeah. We see one more 2-day rally, December 24th and December 26th. We might see one more 2-day rally. I don't know how we're going to close, but maybe we're going to get one more rally out here. Folks, use that VIX ratio between the 3-month and the 6-month and the 1 month out here. And what I'm suggesting right now in utilizing that tool and then taking a look at resistance levels out here, it's time for folks to be very cautious. We may be seeing a change in trend in this market.
Steve, thank you so much. We'll see you tomorrow morning, 11 a.m. Eastern time for the Trader's Edge.
You bet. Take care.
Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. I was just joined by Steve Rhodes. I really want to say that you should probably go back over what he was speaking about. He was speaking about how to utilize the VIX, kind of maybe make a better idea of where we might be going in this market. I really strongly recommend going into our YouTube channel at the end of programming today. That is Tiger Financial News Network right there on YouTube. If you decide to do so, please consider giving the video a like. Please consider subscribing to us. It helps us out immensely. That clip will be up for you at the end of programming today. You know, kind of an interesting insight onto it as well, right? I mean, we're speaking about, you know, you're getting these massive movements to the upside, kind of pre-market, and then we sell off, and, you know, Steve essentially saying, you know, you're getting these kind of Euro buyers and us Americans are selling into them, right? And it's kind of this weird thing where Europe is not doing significantly well, especially compared to the US. Nobody really is. And so you're getting this capital flow coming in to the US, and ourselves, you know, decide we want to sell against that. And I wonder how long that can necessarily last. And it also is kind of interesting. I was reading something this weekend, and I can't remember who had, whether it was a government or some kind of European bank, but they had said that, you know, and it kind of makes sense, right? Like trying to bring capital back into Europe, stopping it from leaving and flowing into America. They were saying that without NVIDIA, Europe would have done better last year, which doesn't really matter because they didn't, and NVIDIA did do well, and we'll probably continue to see something like that persist through 2025, even if you are having kind of this digestion to the downside kind of phase that we're in. And I still think there's a lot of novel stuff. And I think as well, you know, the psychology cannot be ignored right now. You have a lot of people, okay, and I'm talking like a lot of people, like everyone that I speak, this is getting weird, right? Everyone that I talk to is now somehow getting involved in stocks, okay? This is a little bit strange. I mean, it's not. You have a lot of these pressures, right? I think people aren't making enough money, so they're looking for ways to kind of make, you know, just more. You have this rise of almost like sports betting coming in, and a lot of young males are getting in and taking very risky, kind of almost leveraged positions. I mean, you can go online and see all of this, right? And so my point in saying this is that, you know, we've seen companies that probably shouldn't have rallied as much. You know, I look at QUBT and even Rigetti to some certain extent like that. They really don't have a foundation for running as far as they have. And that's a lot of people wanting to catch a hype before it takes off, right? They're trying to essentially mimic a NVIDIA play again, or an AI chip play. I think there are legitimate plays coming in this year. I don't think it's quantum computing at all. It was interesting. I was kind of, mulling over the point maybe before the new year that might be the thing that carries us going into the new year. I'm starting to think that's really not the case. I think once we start getting earnings coming out in some of these quantum companies, that you are going to see a lot of capital flight out. I believe Qubit has their earnings again coming in in April, excuse me. Which I think would be a perfect time probably to, buy puts for that company, and it'll crash down. Same with Rigetti as well. But I do think there are some legit things. I think AIoT is going to be massive. These are companies like Core. This is Kore. Honestly, BlackBerry, maybe look at that actually. Wow, up 11.14% today. 2.4 billion market cap. But they are kind of positioning themselves in a very interesting way to be the IoT company. So I want to do some closer kind of look into it, and we have a nice beta, right? A little bit less than the market overall. So that's something that matters to you. There you go. Of course, you have a negative PE of about 16. It's kind of strange. I'll take a look at that a little bit closer to see why that's the case. You're dealing with Microsoft and automotive software. This is a really interesting kind of pivot as well with this automotive stuff, okay? Microsoft, that kind of makes sense. They've dumped a bunch of money in AI. They want to start kind of using this in some capacity. And I could totally see how it would be super effective to put that kind of stuff in cars. If I'm driving and I'm like, hey, Mazda or whatever it is, I want you to turn it down or call this person. The more hands-free you can get, everyone likes that to some certain extent, or we all pretend that we do. Maybe it helps with insurance, et cetera, et cetera. But you're also seeing NVIDIA kind of pivot into this as well. What was that company that blew up today for NVIDIA? Let me see here. They're basically doing things for vehicles as well. I'll have to get the name for it, but it's interesting to see them pivot. My point in saying this is they've been dumping some money. I think you had Cerence first, and then you have this other company today that has been getting a lot of money, essentially from NVIDIA, and they're going to start putting these into cars. That is, I think, part of a broader thing we should discuss. Okay, what is it? ARBE. That is the company. Yeah. Free space mapping, just basically sensing, okay, for vehicles. Capabilities for the automotive industry. I did pull them up as well. So they're a leading radar revolution, as they say on their investor kind of information. 4D imaging radar solutions enable truly safe driver assist systems today. Okay, I mean, that's just the car being aware of where it's at in space and what's around it. But it's interesting to see NVIDIA pivoting into this, right? Because I think they also are aware that their silicon chips, the way that they use, electricity and just maybe standard silicon, the fact that they can't add any more transistors onto it, this caps the performance at some certain point. I also think Blackwell is going to have some issues with overheating and maybe won't be as great at compute as people want it to be. And so seeing this pivot for them into these kind of solutions is very interesting, right? I mean, this can sustain some kind of growth in NVIDIA for a longer period of time, especially if it comes out, that Blackwell isn't as good, So kind of interesting stuff with that. Another realm in robotics, since we're talking about ARBE, and let me actually pull that up, just so you can see how unbelievably this price has moved today. You're up 55.51%, but you're trading basically at $490. $348 million market cap, quite a massive movement to the upside. I'm very interested in companies like LiDAR that do the same kind of thing. I'm surprised this hasn't gotten as much of a bid. Well, I guess it did a little bit, up 16.01%. That's trading still at a 22 million market cap. So it might be worth actually kind of looking into that a little bit. I will definitely take some look into that. And then, of course, you have this one is getting spoken about quite a bit. This is Rich Tech Robotics, so at $228 million, up 0.73% today at $4.11. This supposedly, as they're saying, and I don't ever buy stocks based on this kind of concept, but if I remember this correctly, give me 1 second actually to look it up. Because I think they're a Canadian company. Oh no, this one's in in Las Vegas. Okay, right. This is the packing one. But essentially, integrating AI with certain kinds of robotics is, one way we can prop this thing up and keep going a little further. You have this PE at 9387. People are doing sympathy plays with other kind of robotics companies with it. Let me see if I can pull this up on Edgar. Should probably be a little bit better on the next segment too, since we're about to go to the break. Kraken was the Canadian one, by the way, if you guys want to take a look at that. Yeah, when we get back from the break, we'll just take a quick look at Rich Tech Robotics. It's been getting a lot of attention recently, as you can kind of see. I think these plays will kind of continue to happen, maybe through a few months or something like that. We'll get insane movements to the upside. At 221 or 229 million, that is tending to be the cap right now for a lot of these smaller companies. But we'll talk some more when we get back from the break. Seriously.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. I want you to take everything at the end about Rich Tech that I said last week, throw it out of your brain. I'm mixing up tickers here. I really want to talk about data center stuff today, mainly NVTS, Wolf, and RXT. I'm going to have to do that tomorrow. So the robotics thing wasn't as fleshed out. Rich Tech is not what I was speaking on. This is what I actually wanted to bring up was Kraken NF, and this is the Canadian company. They're doing sonar, optics, and stuff like that. The idea behind Kraken that people are trying to at least push right now is that Trump will be a little bit harder on allies regarding military building out. I don't really think that's going to be the case, and I'm not necessarily sure that's a reason to buy certain companies. Things like Rich Tech, I don't even know. They are doing like robotic services, which is, I remember I wrote down in my other paper, like, do not like, because I don't think humans want to be served by robots necessarily, at least when you're out to dinner. I don't think that necessarily works. Regardless, it's getting pumped. I mean, it is down right now, 0.86% today, but over the past few sessions, definitely getting pumped. You have NVTS and Wolf. These guys basically do silicon carbide. So we use silicon right now, but silicon carbide for chips. Silicon carbide supposedly is a bit better. Well, you're up 6.73% right now, trading at a 795 million market cap. And then, of course, this addresses some of the issues you might have with silicon, although I do think photonics really is the way to go. And then you have Wolf Speed as well. Now, Wolf Speed is very much... you're going to need like a necromancer to bring this thing back. It is consistently losing money, and it's great that they're doing this silicon carbide. I think they have gallium in with that whole gig, but it is battled stock. So if you're looking at anything like this, maybe take a look at NVTS. Again, you can always go to Edgar, check out what these guys are doing. I always really recommend that. Folks, thank you so much for joining me today. We'll be joined tomorrow morning, 9 a.m. by Tommy O'Brien. We're going to have a fantastic day. Take care. We'll see you then.